So RMI, who's got the Booth not cancelled? Is that you, Morris? You're right now. Thank you. So welcome, and firstly, thank you for your forbearance in 2 or 3 matters. The elbow room in the Kakapo room and the shift from the council chamber. There's a leak in there and we didn't want any drips in the chamber, so we're around here. And then we had some drips.
It's an ongoing issue.
The second thing is this has been probably a little bit faster in process than we would have all liked, and you've had to do some late night reading, I guess, this week as you've got the report, but thank you for getting yourselves up to speed and getting here today. This is quite a pivotal meeting, and we're going to start by getting some reports both on our investments and on Southport, and then we'll go into publicly excluded and deal with the issues of the appointments and the establishment of the investment committee and the sell down and some of those things there. So there's quite a number of big issues, and thank you for coming. Thank you for your preparation, and let's get underway. Now we're all here. Paul's online, those people that had indicated, so I imagine there are no apologies. So having established that, we'll move on to declarations of interest. Do we have any? I'm assuming that's a no. Public forums, petitions and deputations? None of those. So we'll go to the confirmation of the minutes, which are either on your line or on your hard copy at page 7. Would someone like to move? You'll move. Thank you, Jeremy. Is there a seconder? Yeah, thank you, Lyndall. So the accuracy and inclusion of everything that was decided is up for discussion. Are there any amendments or omissions which you wish to draw our attention to? If not, I'll put the motion that the minutes be accepted as a true and accurate record. Those in favour would say aye. Aye. Against no. That's agreed. So we go to notification of extraordinary meeting.
Some new items. There's not none.
No, none of that. Right. What else we got now? Questions? We didn't have any registered, so if there are none now, we'll move on to Chairman and Councillor's report. I think my initial comments were probably the report that I wanted to indicate that thank you for your indulgence, and we wish to proceed with making some important decisions. So we go now to reports, and the first one is a report on Southport's investment update, and I'll put that in your hands, Scott. Thank you.
Thank you, Mr. Chair. So I think we'll take the paper as read, but if you look at the overall market performance there, you'll see your Southport shares are trading just below $6 at the moment, and they've had a slight increase over the financial year that's been. Probably a lot of what's in your pack relates to the time since the last investment committee when we or Southport committee, and there has been the AGM and a whole lot of other bits and pieces, but the piece probably most relevant is the financial results announcement took place only a couple of weeks ago. Very positive result in terms of the port, kind of getting those financials back towards where they were probably 18 months ago. None of you who are farmers in the room will be surprised, but a wet spring meant you didn't have a lot of grass growth, and one of the things that benefited the port is the increase in feed and other things that have to come across the port as a result of that. So those things are the things that have contributed to the increase in profitability for the first half of the year, putting it kind of back into line with where it had been in prior good years. The one thing the port hasn't done is it has given an update in terms of its outlook. So its outlook was between 9.3 and $10.3 million, and they've indicated they will be at or above that, but they haven't given a new range. So it's kind of a and it's probably in line with the fact that over the last couple of years, port profitability has become harder to predict. It used to be reasonably easy, but it has become harder over the last couple of seasons. So that is probably the key takeaways there. The only other one that's worth noting and is that in October last year, and we didn't include this in your reports, but it is available through the NZX website. The port has started doing its NZX disclosures on climate reporting. So all NZX companies have an obligation to go through and to look at what is their, I guess, what is their climate impacts. So for ports, it tends to be a lot of work around diesel and other bits and pieces, particularly on port. So they're starting to measure a lot of those things, and in these early years, it's all about measurement to make sure that you've actually got a baseline to then assess yourselves as you go forward. But it's something that's required across all listed companies as part of the NZX system.
So it stays within their own footprint, it doesn't.
It's within their own footprint, so again, it's controllable that you tend to look at first and foremost.
So are there any questions of Scott? Yeah, Lyndall?
Yeah, I would really like to see a report like this. And I'm hoping that that's what we will see from now on. So if that's the template that we're going to see as part of the Southport report, and I'm pleased about that. And I just did want to ask about the pilot lodge. If anybody knows any more of that, it's an infant safety issue. And whether, I mean, they'll have to report it at some point.
I'm aware that the harbour master was involved, but I'm sorry, I don't give you
No, that's right.
further details.
No, that's really-
The report should say Sterling Point, not Starling Point.
Yes.
Yeah.
We'll get to the report.
Okay. Any other questions? Are we happy to note the report was by the recommendation that's on page 12? If there's no further questions of Scott, we'll go on. Move, Nicole. Is there a seconder? Al, thank you. Any further discussion? Not, I'll put the motion. Those in favour say aye. Aye. Against, no. That's agreed. So we then come to the investment report, and this is on the 31st of December. I'll put that in your hands, Tanya.
Thank you, Chair. Councillor, this is your standard investment report that you've seen for many years, but with a couple of additions that we'll cover when we get to them. I'd like to just draw your attention back to the summary that says that we hold a portfolio of managed funds to maintain the buying power of our accumulated funds. The income is generated from managed funds and is based on movements in the portfolio. The realised income is used to reduce the general rate, and the unrealised income stays in the managed fund to build the council's capital investment and resilience. Draw your attention to that because we've got a very unusual situation. You'll see as we go through the numbers in terms of the actual movement in the portfolio in the last few months is quite outstanding in terms of its size relative to what we've seen before. So I was going to take it as read, but at the same time, I just want to highlight some things in the report. Page 17, the table on page 17 just summarises all of the parts of the portfolio and our cash. So the cash on hand, which is also an investment tool of council, at December was 9.9 million. So that's on deposit, earning interest direct into our account. At June, that was -5, and you'll be familiar with our cash flow cycle as our rates come in. So we go into a positive, and that is actually the peak, and will continue to reduce through to the winter. Then we detailed the parts of the portfolio and where they're allocated to. And you'll see that we've got a total then of 33.8 million at December. We note then that over the last 6 months, the portfolio has increased in value by 2.6 million or 8%, made up of 524,000 of income, realised income as we call it, interest and dividends into the portfolio, and 2.2 million of unrealised gains, which is the change in the value of the portfolio on the market. Management fees of 132,000. We note then on the bottom of the page, the volatility has been occurring in this portfolio over time. The table at the top of page 18 shows us very clearly the red bars being the amount that the portfolio has moved in value each month, the simple the market value change. The blue bar being the actual income that it's earning. And of course, red being negative is the months that it has gone down. So we've noted there that July 2024 saw one of the largest increases in the value of the portfolio that we've seen in recent times. Quite significant. I've just jumped into a comment at JB Ware's summary. They've noted that in the quarter alone, the market value increased 5%. Over 1 year, it has been 14%, and over 3 years, it has been 17%. All of the growth has come in the last 12 months. That's quite substantial. I just want to point out that that is not usual. The long-term expected.
Is this pertinent to now?
Oh,
I'll
no,
take
it's just
questions after.
I was just saying, what is, do you know, what portfolio is doing now in the last 2 months, where it's at today?
Similar levels.
So it's just
Yeah,
now.
that has
Yeah.
it.
Went up 2% in January.
Yeah.
Again.
So a long-term average expectation is 5.5% on the annual basis. So this is quite an outlier year, I suppose was what I'm trying to say. So that's the portfolio itself. And then if we look at how it compares to how the management of the portfolio compares to the benchmarks of other managers. The rolling 12-month average shows that the portfolio, and remembering that we've also moved from a 50-50 portfolio in June. At December, we've just reached our 60-40. So the change in the statement of objective investment policy and objective said we'll go from 50-50 to 60-40. When JD were down visiting, they made a point to say that they were transitioning into that. They didn't just go and do it in one day, which is quite sensible. So at December, they've reached that objective. This benchmark here says that compared to their peers, the portfolio is just behind over the same period. It's quite a staggering 15% being the benchmark, and we're sitting at 14.38. However, page 19, the top of that page, says that if we look at the medium-term view over 5 years, and it's very small numbers, 41.3 versus 33. Over 5 years, our portfolio managed has outperformed the benchmarks by 8%, or 1.6% per annum, which is quite significant. So that is good news for us and good news for the community, and reflects well on the management of the portfolio. The middle of the page here on page 19 is a new table that we've added as we move, I suppose, into this investment committee focus. What we're looking at here is the portfolio opening income, the pieces or parts of the income, return to date versus the budget. And we haven't showed it in this way in the past. You've tended to see this within the Finance and Performance Committee rather than in the Investment Committee. So in the middle of this table, we have the budget for the first 12 months of the LTP. So we forecast that we would get $843,000 of gain in the portfolio. Now, this was the first year that we actually forecast that one, having lived through COVID and many ups and downs and volatility. We had been forecasting or not expecting any capital gain in the portfolio, but expecting a return on investment. So we put that in there for the first time in recent history, 843,000. The portfolio in the 6 months actually gained 2.2 million, as I said before, so quite an unusual period of time. We're expecting $830,000 of interest and dividends into the portfolio. Today, for the 6 months, we've earned $485,000. And we're budgeting $200,000 of fees on the same portfolio and sitting nearly at exactly that at halfway, 93,000. So the, again, 5.5% was our total expected return on the portfolio. And the 6 months is showing 8.5. June 30th, we've still got to see where the balance will actually be. The thing about the investment income piece of it is that doesn't change. This portfolio, while it's invested as it is invested, will always earn that 800,000. that's going to happen because that's the outcome of owning interest, bonds and dividends. But as we said, the market value will change. The next table, page 20. So on this table, we're comparing the value of the portfolio to the total amount of reserves that the portfolio is reflecting or is invested on behalf. So all of these reserves in our balance sheet as special reserves, they're reserves that are to be cash backed or cash or similar. So starting first line, we've got opening balances under JB Ware, we've got 31.3 million. And on the budget council column, we've got 30.2. Now that represents a change between when we set the budget in February. In February, we had to forecast forward to July and imagine what it would be. So from February, we said the forecast opening balance would be 30.2 million. Turned out to be 31.3 million. That was the beginning of that change. Now, as we've looked back and researched this paper for you, we noticed that there was no change from June 23 to February 24. At June 23, we had exactly the amount of money in the portfolio as the reserve. At February 24, we were similar, and from that point, we've seen these changes coming through the market. There was $1 million change at that point. Investment returns in total, the 1.4 is the net of the income that we've expected back over the page, net of fees, and the 2.5 is the movement to date. We have 33.8 million in the portfolio at December, $2 million in cash and term deposits, representing 35.8 million, and the reserves forecast at the end of June this year is 31.6. The difference between those two is the budget for the council has not or was not reflecting yet the drawdown of the 3% or the drawdown of the money from the reserves that were in the so the total of that is near 3 million, it's 2.6 million. You might say, why is that not in the budget? It's in year 2, but what we've said is we've moved the cash in year 2, and it could be the beginning of year 2. We will draw down the result of year 1. The result will be what we earned and what we actually needed in the reserves. So the answer to that is by the beginning of year 2, those balances, if the portfolio remains at current level, portfolio will be approximately $1.5 to $2 million above the reserves. We'll keep forecasting that as we determine how much reserves we need and what the portfolio balance is. Before one more table, that question table, they don't have numbers, but at the top of page 21, we're just reflecting where the portfolio is relative to the percentage bands that are within the SIPO and within the mandate given to our JB Ware managers. So you can see they have room to move within each of those bands, and they're sitting nearly dead midpoint in each one of them. So that's just a check, a visual way of representing what in fact is on page 17. Another way of representing the individual components of the portfolios, as is the pie chart, which effectively represents the same. And then we have commentary from JB Ware. What they've been doing on our behalf, small tilts within the portfolio as they see the markets changing and within the mandate that we've given them. So that is actually an awful lot, Chair, that I feel like I've covered, but
no, thanks for that, Tanya. And you know, you've scoped out a whole lot of stuff, and then we have a lot of information from JB Ware, which everybody, of course, diligently read last night up till midnight. So, but are there any questions now about our investment portfolio, Jeremy?
Just going back to the 5-year averages against the benchmarks. Our portfolio, I was just going to say, is it based on, we've obviously adjusted the size from 60/40 now. Is that based on people having a 50/50 side benchmark or just the portfolio?
So the report, what you get in that piece at the top of page number 19, that is basically a performance of each of the what they call asset classes against the benchmark for that asset class. So it doesn't take into account the fact that it moved from a 50/50 to a 60/40. But if you kind of extrapolate it out and say, well, look, we're into those better asset classes now, how are we performing in those? Then you'll get that bleed to come through.
So when you look at that, we've done pretty well on the 50/50 against benchmark over those 5 years. I'm in that 50/50.
Yeah.
So we've performed pretty well. Like I tell you that is that not taking in the change?
The change is effective in the 1 year results. You would
so
see it on there.
it wouldn't be effective.
But the 5-year results, it'll be largely at the weighting previous cycle. But if you look at the report, I think it's Tony's outlined. The first part of it is about the performance of the manager against the market benchmarks. So in other words, the market's gone up by this much. How have we gone against that?
Yeah.
The second part is then how has council gone against its targets? And then you've got the compliance piece of the bunch.
Lyndall?
I think yeah, I was a bit concerned about the rolling 12-month comparison benchmarks, but Tony's explained it well. The other thing I was going to ask was, given how rosy those numbers have been, what's the feeling globally about where things might be heading, given that we've got some very rash statements coming from parts of the universe? Any ideas? Any indication from economists?
Look, I think if you look at some of the commentary, and you guys don't have the January commentary that's come through, there is caution, but there's still optimism there as well. If you look at places like America, their economy is actually doing reasonably well. That supports, things like hard to tell, things like tariffs and those types of things generally don't help inflation. But it's hard to tell whether they're real or stakes in the ground for negotiation. I think what you're finding is your managers are being cautious around some of the sectors that they're participating in. And you've seen adjustments even in if you have a look at the January report, which you don't have, but they have made adjustments as a result of some of those changes.
Thank you. Yeah, Tony?
I'd like to add to that if I can, Chair. I'd given up a long time ago trying to predict what's going to happen. And I like Warren Buffett's version, and that is you make a plan and you stick to the plan. Our plan is to have a long-term average of 5.5% to fund ratepayers, or just support the general rate by an amount of 3%, and to put aside into reserves for future anything that might temporarily be above that line, knowing that a 5.5 average never actually happens. It's always 14 up and 10 down. And it's just a matter of like the dairy prices and the sheep prices. It's just a matter of waiting because they will go down, but they will come back up again. And so that's my little piece of wisdom, is that I'm very happy with the plan that we have. I think it's working. Council has done well to put in place a really robust financial strategy. It happens to be overachieving at this point, but I think that it's just important that we stick to the strategy.
I have a few people, I'll take them in the order that indicated, starting with Nickel.
Yes, no, like this is a stellar report, and I think that things to note are with JB, we are outperforming the market. But first time we've actually seen the breakdown of the shares for a while, and they are reasonably conservatively weighted, that performing well over the next 12 months. That we've moved to 40%. The fixed interest rates are easing back, so that'll affect things a little bit. But I think in the conversations we'll have shortly, I think the 5.5 is conservative going forward, and that does offer us the opportunity this, so we're pretty happy with where things are, and it's the first time we've had this comprehensive report of this actually of where things lie. Was slightly overweight at the moment to overseas, here they will be looking at states at the moment, and that is going to probably outperform Europe in the short term. But Australia might also benefit from the relationship. But no, good report, stellar result, that puts us in a very good position. Going forward.
Thanks, Michael. Any comment on Michael's comment? No, that's right, John.
Yeah, thanks. No, great report. I just listened to the commentary around China. Obviously, like the US and China in one sentence there. We haven't seen China come back to the protein market that strongly of time. So, and we've been talking about this for 12 months now, about the expectation. What is the confidence of the indicators around why they expecting China to potentially rebound?
Well, that's definitely one for Scott.
I don't know the exact answer on that. I'd say that, yes, there's not a lot in here on China, and as a portfolio, your exposure to China is predominantly through your exporters in China, as opposed to direct Chinese shares themselves, and that's where a lot of similar entities to Environment South are, is that they have a very limited direct exposure because you don't know exactly where it's going to go. So I can't give you detail. Everyone sees, but as everyone sees,
Peter,
runs the same copybook.
Yeah, they've put stimulus into the Chinese economy, which is having good outcome along market right at the moment. A lot of prices are I just really interested in the top of page 16, right at the very, and that's I just want to ask if that is a set policy that we've said that's very clear. The realised income is used to reduce the general rate. Unrealised income stays in the managed fund to build the council's capital investment. So we might be rolling out that line to the public when there'll be questions around all this sort of stuff. Why are we doing it? What are we going to do? That I see as a headline statement that can't be changed unless there's a directive by this group in the council to change that. Is that right? Is that correct?
So if I can just reflect back into your SIPO, because the SIPO is the governing document by which JB Ware go and execute the portfolio on your behalf. And yes, we made the move from 50-50 asset allocation to a 60-40 strategic asset allocation, which should give us a higher return over time, and we're probably seeing that already. In fact, I think the benefit is about almost 1% as a result of that change that we made anyway. So, you know, in the 6 months, so we've done well as a result of that transition. But what we've said within the SIPO is that 3% of the return is effectively able to be withdrawn from the portfolio and applied to council's purposes. We're leaving 2.5% behind because all of those values that effectively we're investing are some form of ratepayer reserves anyway. So we're inflation proofing that buying power of that asset, and then anything that you get over the 5.5, and we at a 60-40 portfolio, you should get something over the 5.5. That starts to grow your resilience for other things. Now, that discussion on how resilience is used is, as you say, a council decision.
If we can find a way of putting that within one paragraph to support the rate, we're doing this to support the ratepayer.
Yeah,
that would be brilliant, because the questions will be asked, as we know, in the future. So no, that's really good.
yeah, if I could just here, I have a fiduciary responsibility on another fund that's about 5 million, which is SIPO of 60-40. We changed about the same time. And through that downturn and poor performance, we've taken 5% out to subsidise levies, and the capital growth has been at 1.5% now through that time. So it's not an extravagant claim that Tanya's put up looking for 5.5%. On my experience, I would add it's not my money, but it's something I have a responsibility for. Yes, Scott?
If you look at some of the long-term averages of 60-40 portfolio over the last 10 or 12 years, it's around about just over 7%, 7.5. It's kind of in that range. So that's, you know, yes, the 5.5 in terms of how much we know we're allocating out is prudent, but you've got that resilience kind of buffer that you're trying to build as well. So we're not going out to JB and saying you've only got to get 5.5, but we know that we're using 5.5 for council purposes, either as cash out or as inflating the value of what we had to make sure we keep the buying power. And the rest is green.
Jeremy?
Obviously the global equities is the game changer at the moment. It's just like 31% over a year. It's pretty good. But when we're talking about reserves and things, and that's where we need to look at our reserves, and we've got disaster reserves that we need. I don't know whether we've actually, Tony, I was just gonna looking at Tony, we're always gonna sort of go through there and work out, do we actually need to hold some of this? What's the levels and understanding? And when you see these things, I always go, well, okay, if this is increasing individual reserves, management might say, we'll just put it into the general reserve, but some of us might say, well, therefore other things. It's also the ability to actually do more stuff if you can, get more stuff done quicker, especially in flood resilience and all that, because there's huge parts of this is disaster reserves and things like that. So it's just to understand, I don't know that we've actually gone through all the reserves. We haven't, have we? We do talk about actually what do we actually need to hold.
Councillor, would you like to make a recommendation at the end of this report for staff to do that?
Well, it's something we've talked about. We have.
Yeah.
But with.
Yes, I certainly recommend it.
Be timely, give them.
That's very good looking piece.
Yeah.
Right, that's cool. And Morris?
Just to reinforce what Michael said about the report, it's a very thorough report and Tanya has explained it really well. And in relation to Peter's comments, this is not this is for. This is, as that sentence says, is to reduce the general rate. And that is why we're looking at selling down Southport shares, because we can get more money by having them in this kind of fund than having them in South. And that's better for the whole community, better for our rate base. So, in anticipation of nobody else having anything to say, I'd like to
Move the recommendation 1.
Yes.
Morris has moved. Is there a seconder? Peter? I'll put that motion. Those in favour would say aye. Hence no. That's agreed. Now Jeremy was suggesting another recommendation.
Just that we
That staff
Review
be requested to
reserve
review
levels.
our reserves.
So I think it would be that council staff undertake a full review of all reserves, including their purpose and if they are held in an appropriate manner, and to report back through an appropriate committee.
Just before I take the motion, John, you're indicating.
My memory serves right, was discussing the LTP to be dealt with in the annual plan, is that not correct?
Mm.
I think it was.
So you feel that enough review?
Well, that was.
Right, are you, sorry, I'll take Tanya's comment.
But
In response to what John said, is there sufficient direction in the LTP, or do we need to go where Jeremy's suggesting?
I think Councillor Pemberton is correct, is that the annual plan discussions, which are really not, there's still workshops to come. The reserves were to be discussed in those workshops, and they're yet to happen. But it is on it's on the very near.
We don't have a deep dive planned across all of those reviews, so either I think you could either say we feel an adequate review is done, we expect more to be done in the next LTP, or you could ask for a more fundamental review at this time, because we haven't got a deeper dive of all the reserves individually scheduled at the moment as part of the plan. I'm conscious of time. It's over to councillors what you would like.
Lyndall?
can this not be seen as part of the annual plan review process? Can we just not have a slightly more in-depth workshop on this than we were?
Well,
originally?
I think we could have a motion that clarifies what our intent in the LTP was, and I think that's where Jeremy's going. And if we're happy with that, are we happy? Well, put it on the table, Jeremy, and we'll see what happens.
So I'm just saying that we looked at cyber security. There's some reserves we looked at. I'm talking about disaster reserves versus insurance. Whole dynamics around
Full policy,
there's the point that we say, do we actually need that money? Like, it's been rated. It's a bigger thing than just we're just saying, oh, we've got a bit of spare cash here. How do we use it? We actually don't know what levels
Right.
down
So
to
you-
or up to.
So you're moving that,
I mean, that could be around the annual, but it will be around the annual plan, but we need to.
It'll inform that.
I'm expecting the staff to bring back that info to actually.
well, we're discussing this, we haven't got a motion on
No,
the
it's
table
fine.
yet.
I'm just-
Nickel, your contribution.
Yes, well, like I've used quite a bit second of it, I think, we need to take a step back, we're actually trying to leverage our balance sheet. We've done it in recent years with the portfolio being, raises up in market values. We moved to a 60-40 and of course now at Southport. But I think, we do have reserves that are tied to a certain purpose, and I think it's not about spending the money for it. But it's actually making sure we've got money that's flexible. There's been a number of those reserves, and police land was one that sat there for years with virtually nothing going out of it. So it's just making sure we've got the flexibility that we always ask for something else that we actually have the abilities are. So I certainly support that. That would be.
Well,
My concern about tying it to end of plan is whether there is sufficient staff time to do an economic review.
But we don't want to do it twice.
No, sorry.
I want to make a comment in that we are going to be asked questions by a number of our ratepayers about why we want to sell down. And I think we need an in-depth kind of look to say the substance of why we're doing this is this is what we've got, this is what we can expect. And I'm supportive of Jeremy's motion. Peter, you were going to say.
I just want to be really clear of our commitments and that LTP, like John suggested. I think we should just make sure of that first before we start to massage anything in a different direction, so.
Yep. Okay, so we have a motion about to arrive on the table from Jeremy.
Well, I mean, I'll pull it, if it gets a bit too difficult, like I'm just.
Yeah.
There's more to this than.
Well, I
It's a
think,
long-term thing, so
Yeah.
I'm not saying necessarily. Just putting the questions, I'll be asking questions in your plan, so heads up. So we need more accuracy, we're saying flexibility, more accuracy on this.
so what's happening?
No
So-
motion, no motion.
No motion, you're happy?
Just putting heads up, so.
You happy with that, Nickel?
Not totally, but I think staff have probably taken on board, so might have time for the deep dive, but I think,
Yes, yes, I've got enough.
we'll have a look.
You got enough, Peter?
Yes, I think.
Righto, all right. We got there. Okay, so that concludes that.
Did people agree with the motion?
Oh, you're moving to of the report.
Oh,
I did that, didn't I? Yeah, I
I
did.
did everything.
Yeah, I did do that. So we now come to publicly excluded. Mariette, have you got some words for us that we might know why we're doing
No,
it?
you've done it, read all of those, I'm sure.
What? Sorry? Mariette?
We're moving to public excluded, guys.
Yes?
Okay, so, the items we're gonna discuss on the public excluded would be the confirmation of the public excluded minutes of the committee meeting held on 24th of November. Item number 1, preparing for share sell down decision. Item 2, potential options for investing funds if share sell down goes down. Item 3, recruitment of an independent member of the investment committee. And item number 4, the treasurer report. The reasons would be to prevent disclosure for us for use of official information for improper gain or advantage. Reason 2, to enable any local authority holding the information to carry out without prejudice or disadvantage commercial activities. And reason number 3, to protect the privacy of natural persons, including that of deceased natural persons.
That's the reason. Would someone like to move and go into, thank you, Jeremy, into public excluded. Seconded, Peter. Any discussion, put the motion, those in favour would say aye.
Aye.
Against, no. That's agreed. Can we go offline, please? Could you do that, Mariette?
Without losing Councillor Evans.
Yeah, we need councillor Evans and then.
It's ending the screen.
Paul, I hope I haven't missed your indication at any stage. It didn't come up on my screen. You still there, Paul?
Yep, still here, and
You
I
happy,
did say
Canberra?
aye, but it might have been muted.
Yeah, I can't hear you, but